What's up, everybody? This is Jack from Crypto 49er, bringing you my knowledge in cryptocurrency. So today I want to talk about Elliott waves. But before I do, I want to give away the $5 in Litecoin or $10 on CryptoBridge. And the question I asked on Wednesday was, what is a cryptocurrency podcast that I recommended and the specific episode talked about a crypto trading bot? So 5 of you answered the question, 4 of you answered the Bitcoin Knowledge podcast, and 1 of you answered the Bitcoin Game podcast. And the correct answer is the Bitcoin Game podcast. So on February 28th, I made this video about all the podcasts that I listened to regarding cryptocurrency. And while the Bitcoin Knowledge podcast is one of my favorites, the Bitcoin Game was the one that talked about a trading bot. And in this video, as you can see here, Bitcoin Game number 28 had a episode that talked about CoinCube, a crypto trading bot. So the winner for this week's giveaway is Manu Vin. Congratulations, Manu Vin. I'll be sending you $10 on CryptoBridge shortly. And I just want to point out one other thing before I go on to today's topic. On a recent episode on Bitcoin Game, he interviewed this guy, Mike in Space. I didn't really pay that much attention to the Bitcoin Car Talk thing. I know it was like a comedy show, and I only heard about it from here, but then I didn't actually watch it until recently. And I have to say, it's super hilarious. If you guys have any interest in cryptocurrency and comedy in this case, this is definitely worth watching. All the episodes are super short, and he interviews a lot of different people that are really into the cryptocurrency space. It's just so hilarious to watch. You have to watch it. I'll include a link to it down below. And one other thing I want to point out for today's topic, actually, I recorded it several days ago because it is Easter week break, and I'm spending a little more time with my daughter just to hang out with her and stuff. So there won't be any videos for Saturday and Sunday. And this video on Elliott waves was actually recorded several days ago. But I do have to say, I'm learning a lot, I feel like, from all these videos that I have watched from Philakone, because I have been making a few trades the last couple of days, and I'm actually profiting. Not like when I first got into trading. And I would probably at best be 50-50, usually a lot worse than 50-50. The last couple of days, I'm actually profiting, and I know exactly when to enter, I know exactly when to exit. It's beautiful, I have to say. But anyway, hope you guys enjoyed this video on Elliott waves. Today I want to talk to you guys about Elliott waves. So I'm finally at this lesson. The whole reason why I'm going through this whole entire 24 plus tutorials, 35 hours long from Philakone is for the Elliott waves lesson. Just because I see him do an Elliott wave on a daily basis, basically, and I really had no idea what he was talking about. I just saw up and down waves. I'm like, okay, what does that mean? It's like, no idea. So I finally got to the lesson, finally watched the whole entire video. A little disappointed just because the truth is, he is right. He said it so many times already. It's a 300-page manual, basically, that he's condensing down in the hour-long format. So I don't think I can even cover anywhere close to what he covered, but I'll just try my best to explain what I learned from him. Alright, as he has said, you have to go through all the other tutorials before starting this one. It's like trying to learn how to walk before you can crawl if you don't. It's true. I think specifically, setting up of the view on TradingView or Bitfinex, that's really important. And reading candlesticks and moving averages, those are pretty important to understand as basics as well. So, and then after that, all these are kind of useful to watch, but most importantly, because the MACD and RSI, they're not really specifically related. What you do need to know and have a very thorough understanding is Fibonacci retracement and Fibonacci extension. Without those two things, you'll not understand anything from the Elliott wave theory. The other thing is, and Philakone mentioned a lot of times, because he's on Twitter, he's a presence, basically. There's people that talk to him all the time on Twitter, and a lot of people send him wave counts on Twitter. 99% of them are completely wrong. That's his words, not mine. He doesn't have the time to correct people, though. He doesn't want to, get people upset, because there's no point arguing it, because no one can say the future actually happened until it actually happened. So I'm sure he's not right 100% of the time, and there's no point for him to argue with other people that have the correct count or have an incorrect count. And the other thing, one last thing that I want to point out, is that he made the video when everyone still thought that we were in a bull market. Right before the Korea FUD. This is early January, right before Korea FUD. When we had the dip, we had a couple of dips actually, like end of December dip and then another early January dip. But everyone's still thinking, just minor corrections, we'll be fine. Obviously, we're not the case. We're not in that situation right now. So I really wish he was drawing bear market Elliott waves rather than bull market Elliott waves. But that's neither here nor there. So anyway, let me show you the Elliott wave in TradingView. So this is basically how it looks like, and this is how he's been drawing it. So it's simply, you just use that 1 to 5, this Elliott wave. Going to over here, you should be able to find it in the toolbar as well. All you do is just draw the first impulse wave or the motive wave, the corrective wave, and third wave is another impulse wave, the fourth wave, and the correcting wave, and the fifth wave is the fifth and final impulse wave. The next thing you're supposed to do, and he doesn't explain specifically, probably because he just doesn't have enough time. The second thing you do is there's actually a 5-3 movement. So there's a 5-wave movement, and then there's actually a 3-wave Elliott correction wave, and that's called the ABC waves. He really didn't explain it, but all you have to do is click on the ABC wave here, and just draw it from the 5th wave. So you draw it, and you draw it like this, just sort of A, B, C, just like that. So this is just a corrective wave. That's all it is. If you want more information about just the Elliott waves and the 5-3 movements, I found this video online that does explain the basics of the Elliott wave theory and also the 5-3 movements. So this 8-minute video should explain some of the background that he didn't cover in his video. So the next thing you have to know though is that this entire 5-3 movement is called a cycle, and what it is there's many cycles, right? So it's one wave after another, so it's one cycle after another. But believe it or not, this cycle right here is actually part of another Elliott wave. There it is right here. So this 5-3 cycle is actually part of the 1-2 wave of this Elliott wave. And that's basically how it is. Each Elliott wave is a subwave of another Elliott wave. And you can go farther and farther and farther out. And they even have names for it. So it's actually a subminuette to the grand super cycle. I would definitely recommend reading the Wikipedia article on Elliott wave principle. But it's really long, so I'm just going to cover the specific parts you want to read. So right now, if you go to the degree section, it tells you the different cycles in terms of the length. So the smallest one is called a subminuette, and it's basically the Elliott wave duration is rather minutes. And then there's the grand super cycle, which lasts multi-century. So there's no way that Bitcoin has gone on for that long. So I would say that most of these are actually cycles. The longest one you see is cycles, and probably the ones that you most likely be working with are either minute or weeks cycle. But this is not really that important to remember or know. Just know the fact that each Elliott wave is part of another Elliott wave. And he goes to some of the rules that he mentioned previously, like Fib Retracement for wave 2 and wave 4 are only taken from wave 1 and wave 3 respectively. Never take Fib Retracement of wave 5. You have to take the Fib Retracement from 0 to wave 5. You would take the Fib Retracement from here all the way up to wave 5. You don't just do the Fib Retracement for wave 5. If you take the Fib Retrace for wave 1, you can see how much wave 2 retraced. So in this case, wave 2 retraced to the 0.5 mark. So this is one way for you to determine just by looking at it, because you can then tell, okay, this is where you should be buying into it. And again, same thing for wave 3. So you can see like we have this green box here, this is where you should be buying in. And then for wave 3, so you see wave 3 and you want to see wave 4, how much is going to retrace to, and that will be where you want to buy into and be able to sell at wave 5. Wave 1, the top of wave 1 and the bottom of wave 4 are support levels. So that's very important to know that those are going to be supporting the ABC wave when they come down. The ABC corrective waves didn't fall below wave 4 as it shows here. So it got really close, but it didn't actually fall below it. With the Fib extension, you know exactly where wave 2 is. So you will want to use Fib extension to go from wave 0 to wave 1 to 2, and then that will tell you want to extend out the line so you can see the lines and see how far up it could be. So you can predict approximately where wave 3 is, the top of the wave 3 is, so you should be around somewhere around 1. So this is the target sell zone again. So you'll be buying over here and then you want to sell over here, because that's where the 1-to-1 Fib extension is. So you should expect wave 1 and wave 3 to be at least that point. So sometimes wave 3 can be super long, it could be 1.6, so you could be capturing profits up there as well. It depends on the wave. So again, wave 1 is now the support level, so wave 4 will not fall below wave 1. So wave 4 right here is where you buy in it. And then again, top of wave 5 is where your sell area is, because you can see from your Fib extension, you can see that wave 5, you're targeting 1.618. And that's where you want to be taking profits. If you can predict the future and just draw an Elliott wave right here, and you're like, oh, I'm done, I know exactly when to buy and when to sell. Obviously not the case. No one is able to predict the future. So you can't really just draw an Elliott wave. But what you're supposed to do is plot out the points that you think your Elliott wave is going to be. You want to wait for the first wave to form, and then you probably want to wait to see how much wave 2 retrace. So once you do that, once you have that information, then you can do a Fib retracement to see how much wave 2 actually fell. In this case, it fell almost to the 786 mark. So you actually have two levels. You got bought in around here and around here. So just by using wave 1, actually, you've been able to ladder in your buys perhaps and buy in at 0.5 and also at 0.786 so that you can target wave 3. And that's the whole idea. So this is actually a real chart. So again, this is from the bull run that we had back then in December for Bitcoin. And then the idea is once you bought in at wave 2, you're aiming for wave 3, the sell area, to be right over here. So this is where you want to sell at. And then once you sell it, you want to go and try to target for wave 4 retraces to. And in this case, you would target something over here, but look what happened. Again, remember, with wave 2 retraced a lot, wave 4 doesn't retrace as much. So since wave 2 retraced all the way back to 786 mark, I was thinking, okay, maybe wave 4 will retrace to 382 or maybe a little higher. So you target this area, but look what happened. Target buy, but then never reach. It never fell that low. So you're never able to profit from wave 5. That's just what happens in trading, right? You can never predict 100% exactly. But at least you will be able to make major profit from the wave 2 retrace to the wave 3 target sell area. And then what happens next? So would be nice to predict future. Again, maybe you could use the corrective wave to predict exactly how much Bitcoin falls to, but you can't. There's no way. You can't draw a predictive wave because it hasn't happened yet. But what you can do is, based off of the Fib retrace, so you do from 0 to 5, and you can figure out, okay, it's going to retrace back probably 382 to the golden ratio, 382 to 618. So here is where you target to get a short position. And that's the idea. So if you could get a short position over here, you can profit really nicely when it drops down to here. And that's pretty much the idea with Elliott waves. I mean, that's my understanding of it. I have to say, Philakone didn't really cover that much in terms of the corrective wave. So hopefully he does cover that more in his future lessons on Elliott wave. But that's my video for today, guys. Let me know what you guys think. Leave a comment down below about Elliott waves. Have you guys been using it? Have you guys had any success with it? Let me know. Leave a comment down below. As always, please smash the like button for me. Smash the subscribe button for me if you're new to my channel. If it isn't crypto, it isn't worth mining. It isn't worth speculating. I'll see you guys tomorrow. Peace out.